Hello, 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 and welcome back to yet another live event where we unpack passive investing, multifamily underwriting, structure, governance, one step at a time. So, personal guarantees in commercial real estate and what every investor should know is the topic for today's live event. But before we dive in, for those who may be tuning in for the first time or meeting me for the first time, my name is Vessi Kapulian, former commercial lender turned entrepreneur, advisor, real estate investor. I work with family offices and their family enterprises at the board level, and I also help advise and coach private investors on analyzing deals, specifically in apartments, of picking them apart from A to Z so they can make confident, risk smart investment decisions. And for those willing to do a deeper dive, I actually have a community of investors where we go through that in more detail. And of course, for those who are more constrained on time, I help do one-off second set of eye deal reviews, so investors can have that additional diligence layer and use that information to make their own informed investment decisions on how to proceed. And last but not least, I am a best-selling author with Mastering Multifamily Underwriting: 5 Steps to Confident Risk Smart Apartment Investing. And you can get this book on Amazon. And I really created this for you, the passive investor, to give you the knowledge and the tools so you can vet those deals with confidence and ease. So the last live event I did was actually on non-recourse loans and some of the nuances of those that investors should pay attention to. So feel free to message me or comment below if you'd like the live link. And one of the comments I made during that live event. Oh, thank you, Daryl. Appreciate the kind comments that Daryl mentioned. I love the book; it's so easy to read, and I really appreciate you sharing that because that was the goal, to write it in plain English, so anyone who is not a Wall Street or financial analyst can actually understand how to approach apartment deal analysis. And really what you learn in the book can be carried over into other asset classes within commercial real estate. So really appreciate you sharing that, Daryl. um, but when it comes to during the last live event, that was on non-recourse debt, where I shared with you some of the nuances. One of the comments I made was regarding personal guarantees, and I kind of left the door open to maybe sharing a little bit more about what those personal guarantees are, because they're not all created equal and they can be structured in so many different ways. So I got a few few messages and side comments, and there was sufficient interest, so I decided to do a whole live event dedicated on this topic, because it's I feel like often it's one of the least understood but most important risk elements in a deal. And uh, there may be some very good reasons, right, to provide a personal guarantees, but it's also important to recognize the personal liability that such guarantee may carry, depending on how it is structured. So, but let's take a step back. I know some of you are quite familiar with the process, especially those of you who have done more than one deal at this point. But for those who may be encountering that term for the first time, a personal guarantee is effectively a legal document between an individual or a business entity and the lender, that effectively obligates that individual or entity to cover any liabilities, potentially the full loan amount and any transaction fees associated with it, if the primary borrower fails to meet their obligations. And so the borrower is typically the business entity, and the lender may require the owner of that business entity to stand behind the loan. And again, the owner could be an individual or it could be another legal entity, and we'll cover that in just a moment. And so you may ask, well, and so when a loan has that type of support, when a loan has a guarantee, it's typically known as a recourse loan, right? Because the lender has a recourse to that guarantor. And when they don't, it's called non-recourse loan. But again, there's some watch out provisions there, which I covered in a little bit more detail during my last live event. So you may ask, well, why would a lender require a personal guarantee? And the biggest factor is skin in the game and alignment of incentives. In many cases, even in my past life, when you look through the guarantor financials, and in most cases that's an individual, they may or may not have adequate liquidity or net worth to cover the full amount on the loan. But what the personal guarantee really signals is that they're fully vested in the business. They're fully vested in that venture to a point where they're ready, willing, and able to make that commitment to fill any void or do what it takes to fill the void if for whatever reason the loan fails or maybe doesn't perform as expected. And that leads me to the second reason why a lender would typically require a guarantee apart from the skin in the game. It's additional credit support, especially for a guarantor that perhaps has a stronger balance sheet in terms of liquidity and net worth. And that's really one way to mitigate some of the risks associated with a particular deal. Now, let's get into the meat and potatoes of it. What are the different types of personal guarantees? So, a guarantee could be secured or unsecured. In many cases, they're unsecured, which basically means that you, as a guarantor, you're signing on the loan, but you're not necessarily pledging any of your personal assets, or if you're a corporation, you're not pledging any of your corporate assets. But in a situation where perhaps the borrower doesn't perform as agreed, the lender has the right to go after you as a guarantor. And in those cases, you may be forced to sell some of these assets, right, in order to fill the void, in order to fulfill your obligations as a guarantor. Now, in some cases, again, especially if that additional collateral support is needed, if the loan is risky, or maybe you're looking to optimize the pricing on a loan, right, that guarantee may come in a secured format where you not only pledge that asset to the lender, but they also file a lien on the asset, right? It's all registered in the public records. Now, there are a lot of exceptions around that, right? Certain states, like Florida, for example, has a homestead exemption where they couldn't go after your personal home. Retirement accounts are not to be touched. Life insurance products as well. So some of those assets would be out of scope, and the lender cannot or would not go after them. But there are others, like maybe brokerage accounts, bank accounts, and whatnot. They may require you to pledge and actually file on those. The other types of guarantees is limited versus unlimited. And as the name may suggest, unlimited is basically unlimited, right? They can go after you not only for the loan amount, but any past due, accrued interest, any transaction fees, or anything else that's associated with or orderly disposition and of that loan and payoff of that loan. Whereas a limited guarantee may be capped up to a certain dollar amount. It could be capped up to the loan amount. And in that case, it could be a full guarantee, meaning the full loan amount, or a partial guarantee, maybe up to a certain percentage of the loan amount. And what that really is, again, really depends on that individual situation, as well as the risk profile of the borrower and of the loan. Another type is joint and several guarantees, and that's extremely important, especially when you're getting into partnerships, because it basically means that each guarantor is responsible for the entire obligation, not just their portion or their share of ownership. And I say it's important because it emphasizes the importance of knowing who you're doing business with and really trusting each other as partners. Because what if one of these partners, right, commits fraud, right, and then they're off the hook, not really, but then they're off on their on their way, and now you are left holding the bag of liabilities. And whether you knew about the fraud or not, that's a topic for a whole other discussion, but you will be held liable because you signed a joint and several guarantee, unless you can prove otherwise. And at the beginning, I mentioned that the guarantor could be an individual or a business entity. So again, it could be your personal guarantee, you as an individual signing on that, or it could be a corporate entity. And sometimes those corporate guarantees are more valuable in terms of the collateral support and that they can bring to the table, or the credit enhancement that they can bring to the table. So it's not unusual for a lender to go after those versus the personal guarantee. And when they look at the guarantor, sometimes there may be multiple guarantors, right? Like in a real estate loan, the two key factors that the lender will look at are the balance sheet and the experience level. So you may have for people signing on the loan, right? So they may look at their experience and track record. So that will be and there could be an individual perhaps with higher liquidity and net worth. So that will be the net worth and liquidity guarantor. There could be a payment guarantor, depending again on their what they effectively bring to the table. So hopefully that was helpful for you. And if you have any questions, feel free to put these in the chat. I always love engaging with investors, or you can simply DM me. And on one of these topics, by the way, I want to say that I appreciate you because they're coming based on your engagement. So if you have a question or a burning topic you'd like covered, let me know, and I'll definitely work it into the topic schedule. And if there is enough interest, we'll probably accelerate the topic just like the one today. So we can talk about it, and I'll continue to share information, as my goal is to create educated and empowered investors, or a community of such. And I usually come in Thursday, Friday afternoon. So if you'd like to be notified of future live events, just follow me on LinkedIn and YouTube, where you can subscribe or hit that notification button, and you will be advised when the next event is. I try to stay consistent, but sometimes meeting and travel schedules don't allow me to keep this on a fixed schedule. So Thursday or Friday afternoon is when you can expect me to pop in live. And again, these are just informal events that I like to hold and interact with you guys, and share my thoughts on the market or nuances of deal analysis. I see the question, can you send the link to part one from non-recourse? Absolutely, Daryl. So I'll DM you. So happy to share that with you. So you can dive into some of the nuances of non-recourse, which may or may not necessarily be non-recourse, as many investors are think on the surface. So happy to share that with you, and appreciate you joining today. And I will see you next week. And until then, wish you a great weekend, a beautiful day, and happy risk smart investing. Ciao.